Hello, everyone. Thank you for joining MAGNiTT's Q1 2025 Emerging Venture Market Venture Capital Update. This is usually held by Philip, our CEO. This is the first time I'll be holding this session. Please feel free to share all your questions in the chat box or the Q&A, and I'll be coming back to all questions towards the end of the presentation. The presentation is going to be divided into around 9 sections across the board, covering multiple regions and areas. So our team will also be sharing several links on the reports that we've shared so far for Q1 2025 and some of the articles that we've written already about the tariffs and the impact of tariffs on the market. So just to start with this, had I have to do this webinar before the first week of April, the focus and the outlook would have been a bit different than what we're going to be sharing now. So coming from an economics background, it's always easier to put some economic context to before the VC deep dive. So just to start with, in 2024, we've ended the year with a record stock market performance. In Q1 2025, post new president assuming office, we've seen a downward correction in the performance of those markets. So it was no longer the record we've seen during 2025. However, it was a bit of a slowdown. Come in April with the tariff announcements, we've seen a huge volatility across the board of the stock markets. So during the week of April 8, we've ended the market at a 12% decline week on week. For April 14, it was a 3%, year to date, it was a 3% decline. The public markets usually tend to capture the impact of whatever happens, whether positive or negative, faster than the private markets. So as what we usually what it usually takes the global markets to capture the impact of the global private markets to capture the impact of whatever macroeconomics, whatever is happening at the macroeconomic level is between 3 to 6 months. In our region or across emerging venture markets, it's usually between 6 to 9 months. Post tariffs, the scene is a bit different. So with this ongoing uncertainty and volatility across markets, we do not know what to expect at the level of both the private and the public markets, because as you see, the decline, the sentiment is during the same week, both positive and negative. And as I mentioned earlier, you can check our take on the tariffs through an article on the MAGNiTT platform. At the broader macroeconomic level, the IMF had forecasted a 1.9% inflation in the US during its past World Economic Outlook, which is ideally lower than the 2% target that we've seen. However, expectations are a bit uncertain at the moment. So consumer expectations for inflation over the next 12 months hit the highest levels since what we've seen during the pandemic. So the period of the tariff announcements for us was a bit similar to what we were seeing during the period of the pandemic, with all the uncertainty it brought with it. Yesterday, the IMF released the snapshot of the upcoming World Economic Outlook, where US growth outlook forecast declined from 2.2% in their previous outlook, which was released in January, to 1.8% in the most recent outlook that was released yesterday. This does emphasize the challenges and the pressure that are taking place at the macroeconomic level. Why does inflation matter? So, because inflation comes with monetary policy. And as our CEO likes to call it, monetary policy and one of its most important players, interest rates, are the devil of venture capital. So as we've seen over the past 2 years with decade-high interest rates, we've seen relatively slower venture capital investment, both globally and across the emerging venture markets. During 2024, we've seen the Fed cut interest rates by 100 basis points, with the momentum expected to continue, as we've seen during the end of 2024, into 2025. However, with the tariffs announced over the past couple of weeks, Fed Chair Jerome Powell announced that he believes it's too soon to know what the Fed will take as the right response to what's happening, due to the larger than expected tariffs that were announced by the US admin. So again, this might be causing a delay in further cuts in the interest rates, which also puts some pressure on the sentiment for the venture capital market. On a more positive note, so again, if I had to start this during the first week of April, it would have been a bit more positive. However, just to look at things on a more positive note, AI has been shaping the venture capital activity globally. So during 2024, AI concluded the year capturing 37% of the total funding globally, with 17% of the deal count. In the first quarter of 2025, the influence of AI on global venture deal making has reached a record high of 20% of all deals. So 1 of every 5 venture deals is coming from AI, up from 6% only during 2015, where the whole AI topic started emerging globally at a very low base. In Q1 2025, AI startups closed more than 1,100 deals. Although less than what we've seen during Q4 2024 globally, it was the fourth quarter straight to see a number above that threshold. At the level of countries in terms of AI, the US, as we know, remains the powerhouse, capturing more than half of the global AI deals. However, Asia and Europe are now catching up. The data on AI and the deals is captured from the CB Insights Q1 2025 Venture Investment Report. One very vibrant term we hear across the markets, especially that now it's not only VC at MAGNiTT, it's both VC and PE spaces that are covered, is IPOs. So IPO is a very vibrant term. For some, IPO is the best case scenario for startups, for the end of a startup. However, the IPO market, as per EY, has seen dramatic shifts over the past couple of years. So as per the latest EY report, there were 2 time frames for IPOs globally. Between Q3 2020 and Q4 2021, it was more of a boom. Between 2022 and 2024, the years which saw the relatively higher interest rates and the contained liquidity and the contained venture capital activity, it was more of a slowdown. In Q1 2025, despite the uncertainty, IPOs saw year-on-year increases in both number and proceeds. So globally, if we're capturing that, we're seeing a 3% year-on-year increase in terms of the number of IPOs and a 20% year-on-year increase in IPO proceeds. Looking at the Americas specifically, we see a 51% year-on-year increase in terms of the number of IPOs and a 2% year-on-year increase in terms of the proceeds of IPOs. However, with the new US admin driving changes in trade, taxes, immigration, regulatory policies, these shifts are creating both risk and more window for opportunity. So again, for us, the highlight of whatever is going to happen during the remainder of 2025 is more of an uncertain environment based on how the market is going to capture the impacts of whatever happened. Let's look now at the VC space. So before I deep dive into the regions, it's nice to put a bit of global context to what is happening in the venture capital market globally. In Q1 2025, so in Q4 2024, we started seeing improvements at the level of the venture capital activity. In Q1 2025, venture capital globally, venture funding globally actually rose by 86% year on year, driven by OpenAI's $40 billion raise. Deals, however, continue to decline for the 4th quarter straight. So we're seeing, and this is what has been happening at least for the past 3 quarters, improvements in terms of the value of funding globally. However, deals are still declining. Year on year, during the 1st quarter of 2025, we've seen a 28% year-on-year decline in terms of the number of deals that were closed globally. At a quarterly evolution, if we're looking at the quarterly evolution of this, as I mentioned, we've seen the 2nd consecutive increase in terms of value of funding. The quarter closed at $121 billion, an 11-quarter high in funding. So we're catching up from the highs we've left during 2022, where the decline started taking place following the post-COVID rise that we've seen between 2021 and 2022. The significant contrast that we're seeing between the increase in funding and the decline in deal count highlights one very important topic, which is capital concentration. And moving forward into the presentation, I'm going to show you what is exactly capital concentration that is taking place. The opportunities across the stages and the geographies have fueled growth in the deal sizes globally. So simple math, deal sizes, rising value over a declining number of deals is an increase in the average values. So far in 2025, the median deal sizes of deals globally are at a record of $3.5 million, which is a number we haven't seen ever. If we're looking at the comparison of the regions that are captured in the global markets, which are the US, Europe, Latin America, which are not covered by MAGNiTT. So we see that the US had seen a rise of 144% year on year in terms of the value of funding. However, deals are declining, and it's by pure coincidence that globally, in the US and in Europe, deals declined by 28% year on year. In Europe, we're seeing funding increase at a 13% year on year in Q1 2025. In Latin America, which we like to link as the emerging venture market of the Americas, we're seeing a 50% year on year increase in terms of the value of funding. All of those saw a comeback that came with the improvement of the overall globals, with the decline in interest rates that took place last year and more flow of liquidity following the moving from the safe havens into the more riskier venture capital investments. Emerging venture markets. The story is a bit different across the emerging venture markets. Just to highlight what MAGNiTT covers as emerging venture markets in total, emerging venture markets, as per MAGNiTT term, are Southeast Asia, the Middle East, Africa, Pakistan, and Turkey. So all those combined did see a 34% year-on-year decline in the number of deals, which stood at 295 in Q1, and 23% year-on-year decline in the value of funding, which was around $1.6 billion. This was the lowest for a quarter since the fourth quarter of 2017. So this was even lower than what we've seen during the worst pandemic days. And mostly this was driven by a strong decline in the deal counts at the level of both pre-seed and seed. To set things right, the decline, there was an outlier. So the performance was a bit mixed. The Middle East was a bit of an outlier in terms of the performance. The Middle East alone did see a 65% year-on-year increase in terms of the value of funding. However, the decline mostly came from Southeast Asia. On a year-on-year performance, the bucket of all three regions we cover was mixed. Middle East as a positive performance, Southeast Asia negative performance, Southeast Asia and Africa hit a 5-year low. However, on a year-to-year performance, we're looking at flattish performance for Africa, Southeast Asia, 54% year-on-year decline, Middle East at a 65% year-on-year increase. Most of the times we coin this as per MENA leaning on sovereign wealth funds to sustain their deal making. Southeast Asia and Africa are more reliant on global LPs, whereby they struggled a bit to maintain momentum amidst the shifting risk appetites that we're seeing. Again, as I mentioned, if we aim to break down the reasons behind the overall performance of emerging venture markets, Southeast Asia did see the steepest drops, with funding down 54% year-on-year. Deal count in Southeast Asia dropped to 90, which was the lowest for the region since Q4 2016, which is around 10 years back, where the market was less mature and less active. The 70% drop in pre-seed deals and weak LP activity signaled a bit of structural shifts across countries like Singapore, which is the powerhouse of funding in Southeast Asia and Indonesia, which is among the top 3 most active markets. The Middle East was the only region, as I mentioned, to see as year-on-year growth, with funding reaching across the Middle East only, without North Africa, $616 million, higher than any quarter in 2024. However, again, in the Middle East, number of deals did see a decline. Those declined to 112, which was still in line with the levels that we've seen on average during 2024. Funding in Africa, as I mentioned earlier, was flat, as we see across the board of those changes. However, non-mega deal funding in Africa rose 28%, reflecting a shift more. So the decline was more on the earlier stages versus a shift more towards the Series A and B stages. Africa saw a 58 deals at 58, where this was the lowest transaction count for the continent since Q4 2017, as I mentioned earlier, mostly driven by early stage pullback in terms of the number of deals. MENA, this was the star of performances across our regions. We've seen as in line with the global trend. So if we want to create a certain comparative analysis, we see that MENA was in line with whatever was happening at the global level, despite at a bit of a delayed performance of a single quarter. However, it continued its strong funding momentum from Q4 2024 into Q1 2025, outshining its EVM peers. So it outperformed both Africa and Southeast Asia. Looking at the numbers specifically, we see that MENA recorded $678 million in funding, which is a 58% year-on-year rise compared to Q1 2024, and again surpassing all quarters in 2024. We've seen an increase in both non-mega deal funding, which basically last year was the positive across all our comments. So last year, the positive trajectory was coming from the non-mega deal funding. However, this year there was an increase in both, a relatively smaller increase in mega deal amount, however, also an increase in non-mega deal amount. Deals on a more negative side have seen a negative trajectory of a decline of 21%. Again, what happened in the MENA region was a bit similar to whatever happened globally. We are seeing an increase in the average size of the deals compared to what we were seeing last year. All right. So, as I mentioned earlier, the increase in deal value in line with the retreat in deal volumes creates capital concentration. What's capital concentration? Again, we go back to the driver. So at least in 2023, we believed, or 2022, 2023, we believed the drivers of growth in funding across the regions was mega deals. Globally, there is a comeback of mega deals. So during the first quarter of 2025, we've seen mega deals at 84.4 million, the highest since Q4 2021, and a total of 145 mega rounds, the highest quarterly total since Q3 2022, which is a 10-quarter high. So this is the highest we've seen in 10 quarters. What's interesting about what we're seeing globally is there's a record-breaking trend this quarter. There are 8 early-stage AI startups that had raised 100 million plus rounds. So those added to a total of $1.8 billion of early-stage startups closing deals that are more than $100 million. What's interesting about this is there's a major signal that investors are comfortable writing big checks for AI companies at a much earlier stage in their startup journey. So the surge in funding, so while actually AI startups are the main beneficiaries in this capital concentration, they are grabbing more than half of the quarter's funding. We are seeing activity across other sectors globally. So fintech funding did increase globally to $10.3 billion. Retail tech did increase to $6.5 billion. Digital health grew to $5.3 billion. What's more interesting is what's more interesting is that mega rounds are now making 70% of the total funding, which is up from 60% last quarter. And this is the highest in more than 16 quarters. So if we look back at the chart we have here, we're at a high relatively in whatever is captured here, which is more than 4 years at least. Emerging venture markets. The story across emerging venture markets is a bit different. During the first quarter of 2025, we've seen only 3 deals being closed. The value is $435 million, which is the lowest, as I mentioned earlier. So the lowest in funding for the EVMs and the lowest in deals was Q4 2017. It was also the lowest in terms of the value of mega deal funding. So mega deal funding is now at $435 million, driven by 3 deals, one of which was Tabi's $160 million, which came from the Middle East, 2 of which were Nidong from Vietnam and Darwin Box, which is from Singapore. However, the activity from Africa in terms of mega deals was more or less muted during the first quarter of 2025. The slowdown in late-stage investment was basically the largest driver behind the overall drop in aggregate funding, alongside a drop as well in terms of the non-mega deal activity that we've seen specifically in Southeast Asia. We've seen the share of mega deals to total deals dropping to 28%, which is the lowest for a quarter in more than 5 years, especially as regions like MENA saw year-on-year increases in their non-mega deal funding base. So as I mentioned earlier, with the non-mega deal funding base increasing at a faster speed than the mega deal funding base, the share of mega deals to total funding is declining across our regions of coverage. Mega deals accounted for 24% of MENA's total funding in Q1 2025, lagging behind Southeast Asia, which saw 44%. So with the smaller funding base in Southeast Asia, because Southeast Asia, as I mentioned, did see a decline in both mega and non-mega deal funding, this marked the lowest contribution in funding from mega deals in Q1 for MENA specifically since Q1 2022. So currently, the bigger activity across the MENA region is coming, or the relatively larger share of activity in terms of funding in the MENA region is coming from the non-mega deal activity, which is seed, Series A, Series B, Series A and Series B, which relatively saw an increase during the first quarter year-on-year compared to last year. One of the very interesting changes that we've captured across our reports during the first quarter is this breakdown by share. Last year, when we ended the year, we used to say that the concentration in Southeast Asia is a bit different given the maturity of the market. Maturity, not in terms of where the startups had reached, maturity is how long has the market been there in place. So for us, it was the Southeast Asian market is between 17 to 18 years. The MENA market is between 10 to 13 years, and the African market is between 7 to 8 years. What we've seen was the 1 million to 5 million, which is the product market fit, getting the biggest share of deals across emerging markets. What's interesting currently is that the share of the deals in the 0 to 1 million, which was the star during 2023, where liquidity was very tight, continued to decline amidst a shift in focus towards Series A and Series B. And across our MENA report, there's a huge focus on how the concentration into Series A and Series B deals has developed. We've seen Series B at relatively, for Q1, nearly at a similar level to what we've seen for the full year of 2024 across the MENA region. The decline in the 0 to 1 million was compensated across MENA and Africa mostly in an increase in the 1 million to 5 million round sizes and the 5 million to 20 million round sizes, which in the MENA region saw a 4 percentage point increase compared to last year. Favorite part of the presentation, ranking by countries. So Saudi Arabia overtook Singapore to become the most funded venture capital market across emerging venture markets for the first time. as Singapore reported its weakest quarters in years. So Saudi Arabia is now on top in Q1 with $391 million, up 53% year on year, driven not only by mega deal funding, but by both an increase in mega deal funding and in non-mega deal funding. The ecosystem in the kingdom is maturing fast. It's on the rise, backed by sovereign LPs, more accelerators, and several initiatives and events that are taking place to support the ecosystem. Singapore has a different story. So once the powerhouse, it had one of its weakest quarters in years. Funding was down 61%. This was Singapore's weakest early stage quarter in more than 7 years at least. So it was not only a decline at the level of the 100 million plus or the late stage funding, it was also a decline at the level of non-mega deal funding or early stage funding. The UAE, as well, however, was in third place, yet saw a triple-digit increase. We've seen a 149% year-on-year increase in terms of funding for the UAE, which put total funding at $206 million, fueled by standout growth stage rounds, including Applied AI's $55 million, which was a Series A, and Nimcard's $33 million, which was a Series B. And if we're spotlighting the MENA region specifically, we can say that Saudi Arabia and the UAE tended to outpace their MENA peers, accounting for a total of 88%, which is a very remarkable share compared to other markets, of the total deal value, and 76% of the total deal count across the MENA region. This was underpinned, as I mentioned earlier, by government initiatives, sovereign wealth funds, fund of funds, which are driving capital into the startup ecosystem of those countries specifically. If we're looking at deal count, I know deal count was not as positive in terms of growth, but if we're spotlighting Saudi specifically, Saudi is now on top, again, in terms of the number of deals, recording 54 transactions in Q1 2025, down by only 8%, which is the lowest across the top 10, which is ideally a remarkable outperformance of the other regional contractions that we've seen across the bunch of the top 10 countries that were there across emerging venture markets. From countries to industries. So now Saudi is star in countries. I've been at MAGNiTT for 3 years now. FinTech has been the star most of the times across industries. FinTech is still holding the crown as the most funded and transacted sector across EVMs overall. This does not apply to EVMs separately at the moment. So again, underscoring its role as a cornerstone of financial inclusion and digital transformation, this continues to be there. In MENA and Africa, or in the Middle East and Africa, FinTech was on top. However, in Southeast Asia, enterprise software climbed to top funding leaderboard, driven by the $140 million deal that was closed by Singapore's Darwinbox, which is an enterprise software startup. On the deal count side, across emerging venture markets, the story for FinTech was just as strong. It retained its dominance by deal count across all 3 emerging venture markets, recording 35 deals in the Middle East, 21% in 21 deals in Africa, and 18 deals in Southeast Asia. In the Middle East, this marked the 3rd consecutive quarterly increase in FinTech deal activity, and this was a record high of FinTech deals ever recorded in a single quarter across the Middle East. MENA specifically, if we're looking at the MENA region, FinTech continued to capture the lion's share in MENA as e-commerce slowed down compared to last year, especially that this year e-commerce did not see any mega rounds. The industry, in terms of funding, accounted for 57% of the MENA region's total funding. In deal count, it continued to rank on top as the most transacted, again recording the biggest year-on-year increase across all of the top 5 industries that are shared in the leaderboard. The momentum, as I mentioned, so across our MENA report, we have the top 10 top 10 most funded top 10 biggest deals across the MENA region. So the top 3 of those were fintech startups, with Tabi's $160 million, Applied AI's $55 million, and Nimcard's $33 million deals. Last year, this section had one of the very positive sides of the story. This year, it's not as positive. However, I cannot say that it's negative, at least if as we move forward into the MENA region. Across emerging venture markets, the number of unique investors across EVMs dropped by 32% year-on-year in Q1. The share of international investors declined from 59% last year to 52% of total investors this year, which is the lowest the markets had seen since Q1 2023. Spotlighting top performers in the market, GIC was the most active investor by funding across the whole of the emerging venture markets, which are, as I mentioned earlier, Southeast Asia, Africa, Middle East, Pakistan, and Turkey. And this leaderboard can be found in our Q1 2025 Emerging Venture Market Premium Report, which is our first premium report covering emerging venture markets. By number of deals, the most active players were mostly early stage ecosystem builders. So these firms weren't deploying just into any startups, they were doubling down a bit into their own regions. The majority of the top investors by deal count made mostly investments in their local ecosystems versus international contributions. While GIC was on top in terms of the value of funding, in terms of the most active investor by the number of deals across emerging markets, it was Plus VC. In the MENA region, while funding was up, although deals were down, last year, the MENA market defied a bit the trends in terms of the investors. So this year, it's mirroring a bit emerging venture markets to a certain extent, following the 20% year-on-year rise that we've seen in terms of number of unique investors that we've seen in the MENA market during 2024. This year, in the first quarter, we've seen a 9% year-on-year decline in the number of investors. This was driven mostly by a drop in local early stage investors, more specifically coming from the UAE. KSA emerged as MENA's top investor base. Again, MENA report was published this week, and it has further details into where the investors are coming from. Our KSA report will be published next week, showing that the more remarkable share of investors in the KSA space are also local investors supporting the space. KSA emerged as MENA's top investor base, accounting for 25% of all the unique investors in Q1 2025. What's interesting about the share of international investors to unique investors in MENA, it dropped by 6 percentage points compared to full year 2024. However, it was still in line with the quarterly average of last year. So usually the frame is for international investor share to total number of investors in the MENA region is somewhere between 45 to 55, and this was still in the range, though at the lower side of the range versus the higher side. In terms of the top performing investors, as we've mentioned for emerging venture markets, for the MENA region specifically, Plus VC again ranked as the most active investor by deal count in Q1 2025. In terms of the value of funding, the most active investors by value of funding across the MENA market were Blue Pool Capital and Hassana, which led the leaderboard by estimated capital deployed in the MENA region. My favorite, usually, chart across most of the reports is the evolution of the share of international versus regional investors to the VC space in a specific region. The story we said during 2023 was this reduction of participation of international investors in the MENA market. Back then, investors were focused on their local portfolios with all the capital constraints that were there, with the liquidity constraints that were taking place. Amidst the monetary tightening, we've seen the share of international investors to total funding in the MENA region drop to 26%. We've seen a comeback of that during last year to 42% of the total funding during 2024. This year, we're somewhere near the average we've seen last year, with 40% of the total funding or the total capital deployed in the MENA market coming from international non-MENA based investors. Just to explain, the internationals are any investors that are not coming from the MENA region for MENA. International across emerging venture markets are any investors that are not coming from Southeast Asia, Africa, Middle East, Pakistan, or Turkey. Last year, the story here was the most negative side of the story. This year, across most of the conversations I currently hold, M&As are the stars of the show. So, M&A activity across emerging venture markets rebounded in Q1 2025. Reasons are multiple. However, across across the markets, we've seen 36 transactions recorded. This was 50% quarter on quarter compared to Q4 2024 and 71% year on year compared to Q1 2024. And this is the highest volume of M&A transactions since Q2 2023. This resurgence is more than just a recovery in activity. It highlights broader market recalibration. Acquirers are beginning to reprice assets with clearer fundamentals, proven scalability, and strategic value. Across our M&A report published during March of 2025, we've had a Q&A we're having actually Q&As with market experts. One of the very insightful statements I got about M&As is that there's this very fine line between what acquirers want to pay and what the companies acquired are accepting as valuations. So we're currently at a relatively good position in terms of the valuations versus the willingness to pay. And this reflected, so if we narrow it down into the MENA market, in MENA, M&A transactions are now at, actually they closed the first quarter at 21 transactions, which is the highest for a quarter ever. This was a 163% year-on-year rise compared to last year. It was driven by pre-tariff optimism, easing inflation, multiple factors. However, if we look at the breakdown of this, we see that 43% of those rained down from UAE. Another 43% of those came from Egypt. So 9 by 9, Egypt had 9 M&A transactions and the UAE had 9, and Saudi Arabia had 3, which is relatively flat compared to what we've seen for a first quarter for the kingdom compared to last year. Interestingly, there's one thing I usually look at when looking at M&As, which is how much international acquirers come to the region and acquire startups from the region. 5 of 9 M&A transactions that took place in the UAE were acquired by international companies, while the remainder are either local or regional acquisitions. The rise in M&As comes at the back of several factors. So one, while looking at the valuation charts we have on the MAGNiTT platform, you can see something that's very remarkable. 2023 was an inflated increase in valuations across the board of startups in the MENA region. 2024 was a very strong fall. So 2023 was not satisfying for one side of the story. 2024 was not satisfying for the other side of the story. Q1 2025 came as a bit of a recalibration to what valuations were. So a bit of a recorrection across the board of valuations. 2, we're seeing some funds approaching their end of their cycles, which is a time ideally for funds, which is believed to be a good time actually for funds to support their portfolio companies to exit or M&A, which could be one of the reasons that we're seeing an increase in terms of the number of M&A transactions. If we want to look more of at the more negative side of the story, not considering that also the comeback of liquidity, the better flow of liquidity did support a bit of this performance. In countries like Egypt, where macroeconomic pressures tend to be a bit challenging for fundraising, sometimes startups do resort to M&As as like a last resort in terms of not being able to achieve the funding that they wanted to achieve in order to grow, sustain, ensure that their continuity across the market. So again, if you do follow me on LinkedIn, you see a lot of directories, funds, advanced analytics. MAGNiTT can help you in several ways. So please do reach out to our sales team if you do not have access. The platform has a very diverse data set at the level of data specifically, and a very diverse research set in terms of what we are publishing in terms of the research reports currently, especially as we capture more and more of the topical reports that are beyond the usual regional and country and industry reports that we focus on. I will open it now to Q&A, and I'll start with the questions. Okay. Okay, what about Levant and North Africa region funding and deal evaluation since 2021 till 2020 Q1? If we want to dissect the MENA region and leave out GCC region and majority of African countries. Thank you, Michael, for the question. So if we want to look, I'll go back to the top countries. So if we're looking at different countries across, so it depends on a bit on the performance. The performance across smaller countries in the MENA region, depending on who they are. Sometimes across our reports, we do see Jordan making it to the leaderboard, and then we see Jordan making on the declining end. So usually the North Africa is a bit more concentrated into what we see as activity in specifically Egypt, which, as you see here is at $52 million, plus 9% year on year compared to last year. We see a bit of activity in Morocco, and we see a bit of activity in Tunisia. So those are where the North African activity is concentrated. In terms of the Levant, ideally in smaller countries like Lebanon, activity is super volatile, especially with all the challenges that are taking place. So while between 20, at least if we want to focus on Lebanon, it would be nicer to focus on the 2019-2020 period before the whole slowdown in the macro in the economics happened. There was a concentrated activity there. Currently, in those countries, if we see improvements, it's improvements from very low base. So again, those are very small markets. As I mentioned earlier, they're only making it now at the moment 12% of the total funding in terms of Q1 2025. Usually they do reach up to 25 to 30%, however, in very smaller chunks. So we do see activity across Jordan, we do see activity in Lebanon, we do see activity across Morocco, we do see activity across Tunisia. However, those are in very smaller value and volume compared to what we're seeing, and in very volatile levels. So while you might see year-on-year increases in 1 year that are triple digit, the following year you might see triple digit declines, which makes it a bit volatile into their placements. Thank you, Vivek. How will tariff and trade wars impact MENA EVM, and where does India feature in the Southeast Asia analysis, as there is no mention of their VC deals? Okay, so we do not currently cover India as part of Southeast Asia across our So the countries covered as part of Southeast Asia do not include India at the moment on the MAGNiTT platform. I believe India would be captured alone once we start capturing India data. The tariffs and trade wars. So again, if we want to focus on that specifically, in terms of the direct impact, it most probably won't be impacting the MENA market much. However, the indirect impact is the thing that could be impacting the MENA markets venture capital space. Why the indirect impact? Because again, if globally or if in the US inflation rates went back to an increase, if growth declined, this means tighter liquidity. Again, this means a rise in interest rates to be able to compensate for the inflations, which puts the monetary challenges on the table again, which puts the portfolio, which puts investors who are tending to focus more on their local portfolios on the table again. So as a direct impact at the moment, there's no clear visibility on what the direct impact is going to be. However, the indirect impact is what would be captured more in terms of the MENA and emerging venture markets ecosystem, especially as the monetary policies do affect. So ideally, banks, central banks in the region do follow the Fed for their monetary policies. And especially in terms of the volatility of oil prices and the return of oil prices, whereby most of the times the returns are used for several investments across the board of different investment assets. So this is one. Two, it also comes at the price of a delay in M&As and IPOs, which usually come back but with returns to the startups. All right. Thank you, Michael. Do you see the mega deal decline by 29%? Okay, I'll read that again. Do you see that mega deals decline by 29% year on year in MENA as a sign that the investors, LPs, are now more cautious in investing in the startup ecosystem as the economy is fluctuating and turmoil across MENA, or due to disbelief in the new startup capabilities to excel either in their early stages or in their expansion projections? I don't see it very specific to MENA. Mega deals year on year did not increase. Did not, sorry, decrease. Last year, during the first quarter, we've seen a single deal for Sella app worth $130 million. We've seen this year one deal for Tabi worth $160 million. We've seen a bit of a hype in the mega deals over the past couple of years. However, this does not signal, it does signal cautious investment sentiment, but not specific to the MENA ecosystem. It's more into the overall sentiment that's taking place across the overall investor sentiment that's taking place. Previously, we've been seeing international investors coming and investing in relatively later stage deals. With the pullback of international investors and them focusing on their local portfolios, it was a bit harder to see investments into bigger size deals. However, what's interesting currently is that we're seeing local investors or regional investors investing in the late stage funding or the mega deals. So it's a bit of an overall cautious sentiment, not necessarily specific to the MENA region. Again, one thing that we notice to a certain extent is the delay of the impact in the MENA region or across emerging venture markets. So let's say usually we see whatever is happening globally replicating in the region at a delay of 2 or 3 quarters. So we expect the comeback of mega rounds that we're seeing globally, though not at a similar level, because especially with the sizes of the markets, we see the comeback of those mega deals. Given again, this is an answer given that the impact of tariffs is not as negative. The comeback of mega deals in the region to catch up at least during the third or fourth quarter of 2025. Again, if things remain relatively the same and if no negative impact takes over the overall sentiment, especially with whatever is happening in the tariffs. Okay, when you say that funding comes from international, thank you, Bel. When you say that funding comes from international investors, could it be that they're expats based abroad but investing in their home country? It's an investor that's headquartered outside this region. So the nationalities of if they're angel investors, I believe it's a bit of a different story. But it depends on the headquarter of whether it's a VC investment company, a holding company. It depends on where the headquarters of those investors are. Thank you, Zaid. Fintech is the leading sector. Can you give me more detail on breakdown within fintech? So our fintech report is coming out during the second week of May. This will have further details on the breakdown of fintech. But one thing I can tell you about fintech, especially in the MENA region, is that there's a lot of the fintech funding coming from payment solution startups. So usually, and this has been the case at least over the past 2 years, payment solutions startups that focus on payment solutions are mostly the startups that get are the most active in both in terms of the number of deals and in terms of the value of funding activity in the MENA region. All right. I'm happy to answer any other questions for the coming couple of minutes. Okay, thank you, Michael. For the M&As done this quarter to be 21, are all fintech? No, they're not all fintech. There is a breakdown across the start. One second, let me just confirm where the breakdown is specifically coming from in the MENA region. It's a bit diverse. It's not only fintech, I'm sure, but I'll give you a more clear breakdown onto where they're coming from. So we're seeing e-commerce, we're seeing 14% of those coming from fintech startups, and we're seeing 19% of those coming from enterprise software startups. So there's a breakdown across other industries. There's a breakdown coming from enterprise software, fintech, and e-commerce as well. Yes. Zaid, all your questions are covered in our reports. Yes, we do have a breakdown of local versus international in KSA specifically. In KSA, mostly, the bigger share is coming from ideally from KSA-based investors, which is more than half of the investor base coming from KSA-based investors. Stay tuned to our KSA report coming out next Tuesday. Happy to answer any questions. All right. I believe the team shared links to all our Q1 reports. Again, more reports are coming out during May and June. So we also have the KSA report coming out next week. We have a note on IPOs coming out during the first week of May, FinTech report going out during the second week of May, with more additional reports on private equity also going out during the last week of May into June. So please feel free to reach out to me at farah@magnitt.com with any questions you might have that were not captured during this session. If you're not clients, please reach out to our sales team, because the platform is expanding with the data covering the regions and private equity as well. And the report base is increasing and is capturing very diverse topics. Thank you so much for attending this session. I hope this was useful and informative. And again, please feel free to reach out with any questions to support you in your analysis. Thank you.